9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories today. Stocks across the Asia-Pacific and long-dated treasuries rallying this after the U.S. announcing it's boosting debt buybacks to lower borrowing costs. The dollar stabilizing after it hits a 3-month low.
China's tech earnings season produces another disappointment, with Kuaishou's profit falling by a third. Focus now turns to Alibaba to see if its revenue justifies the cost of its AI build-out.
And HKEX CEO Bonnie Chan tells us that the financial hub's IPO pipeline remains strong as a tech-led surge in listings is driving record earnings.
Try to say this 10 times, Dave.
What?
Scott Besson's buybacks jolts bonds. I was reading that headline here this morning and just trying to see what the impact this has really had when it comes to the long end of the curve. And we certainly have seen that sharp reaction after, of course, this pretty surprise move from the Treasury here overnight.
Yeah, well in advance. I think they've become more specific in as far as this version of intervention is concerned.
Yeah.
We're talking about intervention as far as the Japanese yen is concerned. So certainly markets did listen. Whether it's sustainable, I think, is another question altogether, given the debt load is still there. And also actually coming out at the same time as the markets were digesting the comments coming through out of the U.S. Treasury Secretary. And, we talked about the dollar down, yields down to the 30-year yield, massive move up in 30-year futures.
Yeah.
Was also the release of Fed minutes, right? And it does seem, looking at what this family feud that they alluded to there, it looks like most officials are leaning towards higher interest rates. Now, whether they are able to do that is another question altogether. But how does the market interpret one where it's QE light, but on the other, this orientation towards higher yields? What it's doing across the Asia-Pacific, it's creating a platform for risk assets to rally. We talked about equity markets. You look at gold, you look at silver. Crypto's also back. Bitcoin around 70,000. Bonds are following what we had on treasuries overnight. So yields should be lower across the Asia-Pacific. 10s are coming up on your screens. We do have several bond auctions to note, of course, as we go into the next 2 days or so. 20-year on the U.S. Treasuries, the next on deck. We are, as you can see, 10s are down just across the board. We talked about gold, silver, 4,500 on that, 70,000 I mentioned. I think we're up 4 days on oil. And the Kaushou index, I believe sidecar was activated last few minutes or so. Have a look at where we are in the Kaushou. SK Hynix, after the close yesterday, announced that buyback too. So that's pushing the stock even higher today. Taiwan is coming online, and as you can see, there we go with Japan as well. So this rally just about across the board. It's also worth pointing out that this is happening with the Philly index overnight continuing the weakness that we had going into this morning. A50 futures, Kuaishou is a stock we're tracking that's likely going to see substantial downside today, and also Alibaba as it is set to report today.
Yeah, so certainly there was a big sell-off yesterday, especially on some of this tech benchmarks. So certainly one thing to watch now that the earnings season is starting to pan out, not as expected when it comes to the China tech plays, of course. We had disappointments when it came to the likes of Baidu, Xiaomi, now Kuaishou. Baba, though, I mean, we're talking about the best quarterly performance in the stock that we've seen for some time. So certainly that one has been the leader on the board when it comes to HS Tech. We'll see if it delivers when it comes to AI, e-commerce, and the like. But yes, back to our top story about what we saw, right? So I think back in November, it was Scott Besson that said he is the best top bond salesman in the nation, or he's going to be. And by doing that, he uses the yield curve as a way, a barometer of his success. So the fact that they're doing this, I mean, everyone's going to question the timing of it, right? Why did they not do it during a quarterly refunding sort of meeting, and they're doing it in between? It does signal maybe some urgency that maybe the Treasury is now looking at this bond sell-off on the long end and saying, look, this is a bit concerning ahead of the November midterms, and so this is their way of maybe taking more control of that here once again.
Yeah, absolutely, and I think the fact that they are talking about it now is interesting, right? I think they're bringing forward that window when they're planning to do so. In fact, also increasing the amount that they're
doubling it,
being said to be buying here as well, right? So markets did react, and I think what we saw also this week was not just in the U.S. Treasury markets, but we had, a lot of the DM folks had trouble getting their auctions out. They had to pay higher yields for that. We talked about Germany, we talked about Japan, of course. Now, on the back of what we found out and we woke up to this morning, some commentary coming through here. Jack McIntyre, who we have on the shows quite regularly, say they have to try something, he says. Sentiment in the long end is as bearish as I have seen in a long time. Coming out of ING, as you can see also on your screens, the fact that it's being done now suggests an ulterior motive.
Yeah, so the big question is, does this spark some sort of strong rally ahead, or is there some questions on just the long-term effectiveness of these moves? They did also mention if this whole rally does reverse, they do have the option of buying back more, right? At least $4 billion, they said. So is that a clear enough policy signal as well, right? We did speak with the former St. Louis Fed President James Bullard about this as well. He, too, was a bit skeptical about this Treasury's move. Take a listen.
The market reaction suggests that this is an important tactical move from the Treasury, a little bit unexpected, so you're probably getting an outsized reaction right now. But I don't think it changes the fundamentals of big fiscal deficits and a Fed on the sidelines, which is what's driving longer-term yields higher.
John Woods is here with us on set, Asia CIO and Head of Investment Solutions at Lombard Odier. You guys are neutral DM sovereign bonds. Does this change your mind at all over that call? What does this change, if at all?
Well, this is new news.
Okay.
This is something that we have to look at closely. Is it a one-off? Is it part of a sustained series of interventions in the market? Obviously, this is a real yield and term premium story. And whether intervention impacts that or changes that is less certain. We, of course, had the US intervening in the yen a couple of weeks ago. That seemed to be more of a one-off than a sustained, concerted program of intervention. So I think the market and people like us, asset allocators, will be looking very closely at what this translates to. If it's a one-off, I don't think it has any major impact at all. It's a fundamental story rather than an intervention story. Possibly that 5.3 was a knee-jerk reaction. When the 30-year hit that level, maybe that was seen as some sort of a reaction required. But my sense is that it's not going to change meaningfully the trajectory if it's a one-off, but until we get to see more sense of how that term premium is going to be addressed.
So what do you think ultimately could bring rates lower? If it's not intervention like this, if it's a one-off, I mean, obviously, there's so many things that are weighing on the long end, whether it's this AI investment boom, the Fed uncertainty, oil prices, and the like. I mean, ultimately, what is the next catalyst, you think, to bring rates down?
I don't know if rates are going to head down.
Okay.
I mean, I think that we could well be in a higher for longer environment. Bear in mind, this is a real rates story rather than a nominal rate story. As recently as 2022, we were having negative real rates, and now I think value's returning to the rates market. It's sort of akin to what we saw before the GFC, where you saw real rates around 2 to 3%, and I think we're returning to that paradigm now. I actually think it's probably positive, ironically, but not least for savers, but for just seeing a broad normalization of rates levels away from the abnormality and emergency post-GFC period.
Yeah, I think that's what Ed Yardeni said overnight as well. He was speaking with John Farrow. I mean, this is not that this is new. This is simply a return to what was.
Absolutely.
You have income. It's decent carry. So what's your advice for people looking at the Treasury curve? Where do you want to be there? And how does this affect the Fed? Do you fade the hawkishness around the Fed?
Well, we're at Lombard Odier possibly contrarian in that we do not see the Fed moving this year. Admittedly, the market is pricing in a hike, but we think that as inflation ticks lower, both headline and core, as the CPI ticks lower, we think that those rate hikes will be repriced. So I don't think this is necessarily a short-end story. Consequently, my sense is that you are in a short to medium duration positioning for the optimum return. I think that the long end is going to be a little bit volatile because the market will be reacting to stories as we saw last night. But for us, it's a short to mid duration story, sort of maybe 4 or 5 years. That's our sweet spot.
What we've learned from this sell-off on long rates is that it seems like it's awoken the cross-asset correlations again, where it's starting to kind of wobble stocks a bit. You're starting to see gold maybe reaffirm a little bit of that correlation with the dollar. I mean, How do you look at the correlations now in this market? And does, if rates stay higher for longer, does this derail this equity rally in any way?
Look, in a shock environment, as we all know, correlations tend to tick closer to one than not. And right now, it's certainly the case that we're getting a lot of perhaps panicked repricing around that. Gold, I think, is a good example. There's a lot of talk about AI crowding out long-duration demand. I haven't seen that in the swap spreads. I've seen it moderately in corporate spreads, but actually swap spreads have been reasonably well behaved. So I don't necessarily buy that argument. And again, I think this is certainly a real rate story, but importantly, it's a velocity story around real rates. If we see a gradual move in real rates, I don't think it spooks the market. If we start to see pronounced, dramatic moves, then yes, absolutely, I would be a lot more concerned about that. But I'm not seeing that right now. Typically, if you see, for example, the 10-year moving aggressively from its trough, 75, 100 basis points, then get worried. But right now, we're not seeing that. And so actually, I think the equity story, particularly as it broadens and deepens away from that sort of AI thematic, becomes a lot more sustainable.
I was going to get to the equity story, to your point. I think since we last spoke, at least, you guys have changed the call on U.S. equities. You're no longer underweight. Help us understand. Was that a function of price falling? Was it something else in that call?
Look, it was really a function of Q2 earnings. Q2 earnings, as it became quite apparent, have started to broaden, have started to deepen. No longer is it a narrow thematic around AI and US exceptionalism. Actually, it's more of a cyclical story now, David. And what we were really quite deriving optimism was the fact that we are seeing CapEx now expanding outside of the AI story. So this is leading to a more broadening growth or a more broadening macro story. And it's our view that as this non-AI CapEx proliferates, particularly amongst the small and mid-cap style of the market, we will start to get a more sustainable equity story. And that's what has led us to that overweight position.
And you're upgrading Taiwan equities as well. What's the rationale behind that?
I mean, more broadly, it's a leveraged play on, it's a sector play, if you will, on tech, on semis. And we think that because this story, in our view, has many, many years to run, we try and strategically enter Taiwan on dips, on opportunities. It's an opportunistic trade, same with South Korea. And in our view, there is alpha, there is returns to be had in playing this leverage sector story in Asia.
What about the momentum factor? This momentum, I mean, terrible July, so we're still trying to figure out what the damage was from the drop in July. How are you thinking about momentum across, of course, the different markets there, including Taiwan?
It's a great question. I think momentum in the United States, for example, has legs. I think it's substantially stronger given this growth financing cost trade-off. I think growth has the edge in the States, and for that reason, momentum is likely to continue. Europe, I'm not so sure. Europe, I think the growth momentum looks pretty weak, and outside of a number of thematics like energy or defense, or to an extent AI derivatives, the story in Europe is not so optimistic. Asia, I think in selected opportunities, tech space, new China, there's a lot more opportunity. But I think you absolutely have to look at the underlying macro story and then couple that with the earnings, and then you get a sense of where momentum's going.
Well, how do you look at the macro situation in China now? I mean, the data has been pretty soft in July as well. Are you concerned at all of them reaching these growth targets, or do you think this whole China AI play is still a safe place to stay?
New China, as you
the new China.
I mean, exactly. We have this new China, old China thesis, and that's not changing. My sense is that there was a lot of optimism around possibly a stabilizing of the property sector. That, in our view, has not happened. Deleveraging continues. For as long as that happens, consumption, I think, remains depressed. And for that reason, I can't get too excited about old China. And more broadly, given that old China is 85% of the economy, growth in general. However, pockets of excellence, pockets of opportunity, pockets of global ambition, not least in the export sector. And that's where we essentially target our opportunity set.
The jury's still out on this. How would you classify the old China tech, the platform companies? Are they old China? Are they new China?
I think they're migrating carefully and to new China, because that's where the opportunity is. Capital and capital creation is constrained in China compared to, for example, in the States. That's why PEs are so low in China compared to the States. There's just not the capital raising potential and opportunity as there is there. And so if the platform companies, the e-commerce companies want to essentially take advantage of what capital there is, they need to essentially migrate to where the opportunity is. And that's precisely what I think is happening now.
John Woods, always great to have you. Asia CIO and Head of Investment Solutions, Asia at Lombard Odier. Coming up next, more on the China tech earnings season as well. Of course, as we count down to Baba earnings, Kuaishou, though, could be the next one to fall. Profit falling by a third. We'll look ahead to, of course, what Baba might deliver on as well. We're counting down the open of trade at Shanghai, Shenzhen, and Hong Kong. This is the China Show.
Okay, 1.4 trillion in market cap is reporting today, just to give you a sense of size, scope, and scale there. And of course, to populate that number on your screens are some of the big names coming through with earnings today. And you really have a good cross-section from new economy to platform and e-commerce. You have a lot of hardware plays there as well. You have sports like Li-Ning. And of course, you have some big brokers and also some big healthcare companies set to report today, like 3S Bio. So just stay tuned, of course, for all those things coming through today.
Yep, Kuaishou is the next one to watch, right? Earnings fell the most in 5 years. It hit by higher revenue sharing payouts to creators, while AI outlays drove spending up by more than a third. Let's bring in our China correspondent on those results and break it down for us.
Yeah, I certainly want to watch its stock when the market opens, but this company has managed to meet expectations when it comes to revenue. It eked out a 1.4% gain, but the big disappointment was the net income, which fell by a third, and this is the biggest decline since 2021. It's also the second consecutive month of net income decline, and so Bloomberg intelligence analyst Robert Lee is saying this could be the start of a profit reset, and we might see net income continue to be under pressure for the rest of the year. And I was listening to the earnings call. You have the company executive as well, the CFO, yesterday at the end of the earnings call saying that they continue to expect near-term challenges. And of course, this is a very fierce competitive environment, right, with ByteDance competing with Kuaishou. One of the bright spots has been Kling AI, the text-to-video generator, which is seeing a 200% gain. But still, that momentum is slowing from the previous quarter where we saw 300% gain. But elsewhere, if you look at its live streaming revenue, that is down by double digits, and it's because of the higher revenue sharing with the live streamers. And it also speaks to the broader weakness in the consumer environment as well.
How are analysts now looking at this? And given that I think the stock is probably going to come under pressure today.
Yeah, many analysts are already cutting their price targets for Kuaishou. And again, near term, is likely to be under pressure for a while. And Kling AI, while it's one of the bright spots for the company, that is a segment that is going to be spun off from the parent company as well. So the rest of the remaining business, whether it's live streaming, its online marketing services, for example, was up 4.4%, but then it's expected to still be under pressure for the rest of the year.
There you go, 5% drop when it comes to Kuaishou as we speak. We're going to see Baba. That's the big one coming up.
Yeah, Alibaba definitely one we are watching, especially after Baidu and Tencent reported earnings, and both stocks saw declines right on the back of that. But Alibaba is seen as probably the best position among the three to capture the AI gains because it is seen as a market leader when it comes to the cloud computing infrastructure. They are estimated to have more than a third of the market share when it comes to cloud computing, so even higher than Huawei. So we'll definitely be watching for the momentum of growth when it comes to cloud as well as its margin. So Jeff Jefferies, for example, expecting the company to hit 11% margins, which is better than the industry, but it's still far from the long-term target of 20% that the company has set. But elsewhere, you look at some of its e-commerce business, that is expected to see softness, as we have seen across all the other earnings as well. Quick delivery expected to see losses narrowing, but we continue to see this intense price competition when it comes to food delivery and quick delivery. So that might be a drag on earnings. And of course, it's also under pressure to show how much it's really spending on AI to get those AI revenue.
Okay. Min, thank you so much. Baba is going one way alongside everything else on the Hang Seng Tech Index, I believe, and Kuaishou is the single weak spot in a market that is rallying. You'll see that shortly. Hang Seng Index coming up on your screens, and also something to tell you about as far as the fix is concerned. More on that in a moment. The opening bell 7 minutes away. This is The China Show.
Your agenda today, of course, we'll continue to track, of course, the sell-off that we saw when it comes to China. Pretty steep losses there. Yes, there was, of course, AI jitters and the like, but there was also that that chip maker as well, talking about maybe they're getting closer to that IPO.
Yeah.
After CXMT. Why? I can't always forget the acronym. Yangtze Memory Tech. That's the one.
Yeah.
So that's one thing that may be partly to blame because of the liquidity issues and the like with all these big IPOs after Unitree and the like. So certainly that's one thing to deal with. In terms of stocks, we have the earnings picture with AIA, Kuaishou reporting as well. We've already seen a downdrift when it comes to Kuaishou. Sectors to watch are gold, right? After that pop in gold, pop in crypto, on the back, of course, that Scott Bessent announcement of buying bonds there on the long end. So certainly that intervention is certainly continuing today. World Robot Conference, also another day. We got plenty of guests coming through from Beijing. We're due for some data out of Hong Kong, unemployment rate, CPI, and of course, we're still waiting for FDI in China.
Yeah, still in the window for that. Yeah, we'll get to the Hong Kong story in a moment here because we are waking up to a weaker U.S. dollar, so that's really creating a really, really solid foundation for equity markets today. And I think Yvonne just talked about the iterations of that in gold and in crypto. As you can see on your screens, we're up by 1.7 on the Hang Seng Tech Index. Now, on the currency itself, because the Chinese currency has already been leaning on the stronger side of things, we are now getting quite a wide gap between the actual fix and where the estimates were. And we're talking about 600 pips, and that is the widest, as you can see, since Feb of this year. So we'll see how this plays into the equity markets today. The opening bell comes up in just over 3 minutes from now. Stay tuned for that. This is The China Show. Yields down just about across the board. The dollar is on much softer footing and almost like a solid good night's sleep. A weaker U.S. dollar almost cures most ills, and hence we're seeing, of course, a strong rally across risk assets this morning.
Speaking of a good, I got some last night,
yeah?
And I think that it makes a whole lot of difference, right? And I think what we heard from Scott Bessent in the Treasury Department there with this sort of unexpected move on buying back bonds when it comes to the long end of the Treasury curve is certainly lifting sentiment, right? That maybe this intervention is at least able to pause the sell-off, this massive rally that we're seeing across DM sovereign bonds here this morning. That's leading the dollar to drop by the most, I think, in 3 months, and then we're at the weakest levels in 3 months right now. Crypto, gold catching a massive bid overnight as well, and we do have an auction coming up on the 20-year as well. So certainly, it seems like it is risk on, just given what we've been seeing here. How long lasting this sort of Treasury move will be, as John Woods from Lombard Odier told us, if it's a one-off, perhaps might not last very long. But if we see a series of these interventions, maybe this could help. It's a clear policy signal that perhaps the Treasury or the U.S. government is getting a little bit more concerned about this global sell-off ahead of the midterms. Nevertheless, here's what we're seeing when it comes to, of course, stocks here this morning. Onshore equities are catching a bid. We're seeing a bit of a recovery on the Chinex, but yeah, we saw some pretty steep losses across the Chinex, across the Star 50 yesterday, despite that blowout Unitree IPO. So certainly there is a little bit more of that bid here this morning. We're watching the likes of some of those chips. So CXMT, Capricorn Tech are slightly up, though. Some of the consumption names are still seeing a bit of downside. Bonds, at least, are unchanged in the long end right now, but we continue to see this rally could be underway as well when it comes to CGBs. Let's flip the board and look at Hong Kong, look at Kuaishou. That's the one to watch here today. So we talked about that hit to earnings, right? So net income slipping by a third, and it really shows the macro conditions are really weighing on a company like Kuaishou, right? When you talk about ads, when you talk about this regulatory crackdown when it comes to e-commerce live streaming as well, that certainly has hit the bottom line. So there you go. We saw massive downgrades when it comes to some of the sell side here this morning as well on the stock. Hong Kong looking like this. Broadly speaking, of course, the big one is going to be Alibaba earnings coming up later on here today. The stock is the best performer on the HS Tech. So it seems like things are looking better in terms of brighter prospects when it comes to the e-commerce side of things, as well as their AI spending and really how that really has helped in terms of its generative models. The cloud and chip operations certainly have led it to the stock to propel 34% this quarter here, and really the best quarterly outperformance against Tencent since early 2025. So right now we are seeing a bit across HS Tech here this morning. We're up by more than 1%, and that really has been fueled by the likes of Baba up some 1%. Baidu's up 2%, Meituan and Xiaomi all looking pretty good. Some strength in the currency, right? So it's interesting given that drop in the dollar overnight. We did see the widest gap between the estimates and the actual fix here by the most since February as well. So there is that to contend with here, just given this dollar weakness and the pronounced moves that we're seeing when it comes to this Treasury announcement as well. Earnings to tell you about. So there's Advanced Microfab, there's Beijing Kingsoft, Baito Steel and the like. So there you go, a mixed picture here, but actually all seeing green now. CMOC Group in particular, we're up close to 5%. CK Hutchison as well as one to watch there. When you talk about
they're taking Panama to court, I believe, is the story there. They're seeking over $1.5 billion. This came out, I think, about an hour and a half back.
Okay.
You remember what's been happening, of course, with the Panama ports. So they are seeking compensation there. We'll get into the story in a moment, but as you can see, we're up 1%, which is fairly consistent anyway with the move in the benchmark today. And Unitree, following it, very good first day at school. Okay, pulling back a little bit. It's 7.10 right now is where we are on price. Okay, speaking of, that gets us into the this big theme we've been tracking this week, the rise of the robots and the World Robot Conference. They are gathered in Beijing today, both, including, of course, us humans, are participating there. And our next guest actually represents a company that supplies things like motors and other components to some of the world's leading humanoid manufacturers. You're looking at some of the company's products right now. Here's how the stock has done over the last year or so. It's a company that's about, if I'm not mistaken, 30 years old. Founded in 1997 in Shenzhen. We're joined out of Beijing right now by Nangle Zheng, Strategic Investment Director at LeadShine Technology. Nangle, good morning, and thanks for taking the time to come into our studios. I know it's probably a very busy week where you are with the conference taking place. Why don't we start with the conference? Day one was yesterday. We're obviously going into another day today. Has anything stood out to you? What were your takeaways so far?
Oh yeah, yesterday it was the first day of the World Robot Conference, and actually there are thousands of people pouring into this conference, and we see a lot of companies, not only the human robot manufacturers, but also hardware suppliers, and many of them, including us, present some new products to the whole world.
Yeah, tell us a bit more about, because you do supply components for these humanoid robots, right? So actuators, motors, exactly. I think it's kind of like the joints of some of these robots as well. How has that side of the business of supplying components really grown? I believe you guys are one of the top leaders now in the industry.
Yeah, actually, LeadShine in the human robotic supply chain, LeadShine is positioned in the motion layer. Actually, it covers like key components, including frameless torque motors, drivers, encoders, as well as integrated solutions such as the joints, the dexterous hands. And I think they are the most valuable parts in the supply chain because generally a robot has 20 to 40 joints. And so they all combined not only directly determine the performance of a robot, but also account for the biggest share of a robot's hardware cost.
I was wondering if you could talk a little bit more about that, because obviously robots, we've seen the robotics industry grow exponentially in China, and I think now is this time of the year, people are focused on how can they get better, how can we, on the retail front, learn to, I guess, coexist and use robots. What value do they bring in terms of physical AI? What are the bottlenecks in making robots better effectively in as far as being able to mimic human movement? I wonder if you could just touch on that a little bit for us.
Okay. I think the bottleneck for the development of human robots right now is not the hardware, because, like in China, the hardware supply chain is very, very complete. A robot maker here can source nearly every component domestically and very quickly within a month or even within days. So,
wow.
Yeah, so that actually greatly cuts the development cycles from years to months. Sorry. So I think the bottleneck is not the hardware. The real challenges right now are first the price, second reliability at scale, and also the artificial intelligence or the brain for unstructured environments and tasks. So I think that may suit some companies like LeadShine very well, because we focus on the hardware, and our goal is to make core components like cheaper and more reliable in volume, so that our clients can build up their robots more quickly and ramp up their production more easily.
Okay, well, talk us through then. Your specific business, how quickly are things growing across your different product lines? And if you could give us an idea, are there specific product lines that you think will see better growth than others as we go through this current boom?
I think the key components like frameless torque motors or the integrated modular joints are going to grow much faster than the other parts. For example, as to LeadShine, last year we shipped over 120,000 units of frameless torque motors, which is a 10x YOY increase. And this year, the orders we received have already surpassed 1 million units. So that's a nearly tenfold increase. So I think the orders, the orders are transitioning from like small batch, prototype, or pilot works to mass production orders, especially for
and it seems like you're engaging
torque motors and module.
Yeah, and it seems like you're engaging more with some of these U.S. humanoid makers as well. There's been some chatter of you having discussions with Tesla's Optimus, Agility Robotics. What is the progress in any way on these talks right now? And is there a chance that you could be a supplier to these companies?
Actually, we are the major supplier of many top domestic human robot companies, including Agibot, which ranked the first globally in the shipments of human robot last year, and also Fourier Intelligence, Galaxia, X Humanoid, etc. And as you mentioned, actually we're in touch with many overseas human robot companies, and we've actually have provided them with samples for testing, and for some of them, we have already started to supply in volume.
Okay, and what about, I wonder if you could tell us, are you doing business with Unitree?
We are in touch with Unitree and have sent them samples.
Okay, sure. Now, since you mentioned you're seeing a ton of demand and a lot of orders, how are you guys doing in terms of capacity? Are you okay with capacity? Are you looking to increase CapEx, for example? I just had a very quick glance at your cash flows, and it does seem you guys are investing in as far as operations are concerned.
Yeah. We always expand our capacity. Actually, the company has a private placement plan this year. But the application is still under the review by China Stocks Regulatory Commission. And once it is approved, we got to raise a large amount of money. So some of them will be invested in the human robotics industry, especially to expand our production capacity.
Could you tell us how much you're planning to raise?
Oh, so it's still.
I mean, you mentioned it, so it piqued my curiosity. Yeah.
Yeah, it's still being reviewed by the regulatory institutions, so I cannot tell more about it.
No worries.
No worries.
Yeah.
No worries.
Okay.
Or I think we're running out of time. We've got to leave it there, Nangle. Thank you so much, of course, for the conversation. Nangle Zheng, their Strategic Investment Director at LeadShine Technology. Coming up, our coverage of the World Robot Conference continues when we speak to Alex Xia, founder and CEO of Xiaomi-backed Xynhua, on their plan to manufacture dexterous hands that can be mounted on humanoids, so from joints to hands. David, we're going through the whole humanoid robot body today.
We're completing
the whole biology class.
There we go. Something to sink your teeth into in about an hour's time. Lots more ahead. Oh, by the way, sorry, before we go, just very quickly here, bio stocks, by the way, just to tell you about that. So again, overnight, in case you missed that, there was a massive news around Moderna.
Oh, yeah.
And the melanoma, and the progress is seeing as far as melanoma was concerned. And as you can see, it's playing out fairly substantially across some of these big names here in the region. Lots more ahead. This is Bloomberg.
All right, more on earnings now. Hong Kong Stock Exchange has reported a 21% rise in second quarter net income, fueled by robust trading volumes and a jump in IPOs. The CEO, Bonnie Chan, told us more about their listing pipeline, this record profit that they saw in the quarter, and the perceived competition between Hong Kong X and mainland Chinese exchanges.
Is there competition, right, between HKEX and the few stock exchanges on the Chinese mainland? I actually see our relationship quite differently. It's complementary. Well, on the face, it seems that we're competing, right? And that's probably based on the assumption that, a company can only IPO once in their life. However, I think you have picked it up in many of your previous reports. There is a growing trend of companies getting listed on both the Hong Kong market as well as the Asia market. Now, some of them have chosen to do A share listing first and then come to Hong Kong for an H share. Others have done H share listing and then return to the Chinese mainland for the A share. I think regardless of whether, how companies want to sequence it, what they are pursuing, when they want to, when they decided to list on both markets, is really expanding their shareholder base.
You launched the HKEX Tech 100 Index last year, but less than a year on, you're looking at making some adjustments.
Correct.
Could you tell us more about these adjustments and why you're making them?
Right. Well, first of all, let me tell you about our index business and why we're doing it. We certainly think that as more focus are turning back to our market, there is a very strong demand from the investors to want to get access to these indices so that they can have better benchmarking and referencing, and therefore, first of all, we do believe that Hong Kong as a market certainly will benefit from a bigger variety of indices, and therefore, given how close we are to the market, we do believe that we are in a very unique position to develop our indices.
How do you differentiate from the existing benchmarks like the Hang Seng, though?
Oh, well, it's quite different, I would say. So the name suggests it's HKEX Tech 100. index, right? So the underlying is 100 stocks. And we deliberately make it in a way so that it's more diverse, which we believe is more representative of the makeup of our market now.
I know you've hit back against this criticism of over-concentration of Chinese companies listing here, but is the exchange doing more to attract non-Chinese companies to list here?
Absolutely. A lot of the companies, especially in the Asian region, they because of the constant need for accessing the capital markets to support their growth, they quite like the fact that they can access Hong Kong, which has obviously a deeper liquidity pool. And so, for companies which might have outgrown their domestic market, having another listing in Hong Kong is very, very attractive. Now, in our pipeline, we actually have close to 10 companies, which are what we call international companies, and they are applying for a listing in Hong Kong from various regions, not only Asia and Central Asia. I also want to emphasize the fact that we are forging a lot of collaboration with regional exchanges. As you know, I have recently been to Malaysia. With Bursa Malaysia, we signed an MOU with them in March this year. And we recently recognized them as a recognized stock exchange, therefore making companies listed on Bursa Malaysia easier to come to Hong Kong for a secondary listing. And this follows a very long string of other activities that I've been pursuing. But I do think that you should expect to hear more about our progress, in terms of attracting non-Chinese companies to list on our exchange.
It sounds like a lot of focus is on Asia. Are you also targeting other regions like the Middle East or other parts of the world?
Yeah, absolutely, absolutely. But the reason that you hear me talk more about Asia is frankly because of the point I referred to earlier, which is the fact that it seems to me that international investors on the whole are getting more focused on Asia.
Are you going to cancel the lunch break?
Lunch break. Okay, so
and extend trading hours. Everybody wants to know that.
All right, so I get asked that question a lot as well, extension of trading hours. So first of all, I would generalize it to say that investors want better access. Accessibility is what investors want. And with technology, right? Yes, certainly, you want to take your mobile phone out and be able to trade whenever you want to. So as a general theme, we certainly will be working on a lot of initiatives to improve accessibility. That is something we'll do for sure. Now, with trading hours, each market is slightly different. We have our uniqueness. What we think we will do, and you have shared with the market before, we will start with the derivative market, which in fact, we now trade until 3 a.m. in the morning already. But that we see good potential to extend it so that we can overlap with the opening of the US hour. And therefore, I think in the first phase, you should expect to hear from us the extension of trading hours on the derivative side.
There we go. Yeah, and that was Bonnie Chan, of course, the CEO of HKEX, with our very own, of course, Min Lo there. Just ahead here in shows, speaking of the markets and capital raising outlook here, so Citi's coming through in a couple of minutes here. We're talking all things investment banking with their head of APAC, looking at that franchise here in a couple of minutes, just helping us understand really what the pipeline looks like, what the activity looks like across the market cap stack. Lots more ahead with that in a couple of minutes. Just a brief glance at markets as we go into the first 21 minutes of the cash market session. We're doing very well across risk assets. Plenty more ahead. This is Bloomberg.
Some stories that we're tracking for you this morning. The U.S. is reportedly conducting an operation to transport oil through the Strait of Hormuz. Axios cites U.S. officials saying they're using a southern route along the Oman coast. Meanwhile, ship tracking data shows 3 China-linked supertankers U-turned in the strait in the past 2 days. Risks to shipping remain elevated, with President Trump saying no talks are underway with Iran on resolving their 6-month war. North Korea has denied any direct communication between its leader Kim Jong-un and President Trump. The denial came even as Trump said he expects to meet with Kim this year. A statement from Kim's sister, Kim Yo-jong, says while relations between the leaders remain excellent, hostile U.S. policies toward the North haven't changed. She says Trump's decision to scale down military drills with South Korea is not even worth commenting on.
Okay, just look at markets right now following, and we'll start things off here with a look at what's happening in Oz, because you did get a dip in the Aussie dollar, a dip as well in short end yields. I mean, this jobs number really coming in unexpectedly. I mean, when does it not do that? So what we got was a negative 16,000 print on overall employment change. We were expecting plus 12. What we got was negative 16. So the market is obviously adjusting to that number. Other things we're tracking, speaking of gold, by the way, right? So gold is a very much in focus in Oz, of course, given the mining presence there. Gold is back 4,500 and it's playing out across these markets right now in the equity space. Dashboard is looking like this. Your major benchmarks are coming up. We're coming off, by the way, a very steep sell-off yesterday in the Chinex index. We are seeing a rebound there. Just about across the board in the equity space, we're better by 1.3%. On MSCI China currently. Volumes are on the lighter side of things, down about 7% relative to this time of the session. We have plenty more ahead in the second hour of the China Show.
Welcome back to the China Show. Here's a look at the China for the half hour of the session here. It's sunny skies in Shanghai. Looks to be the case here today across these markets, just given what we saw with the dollar move. So that big drop that we saw overnight in the greenback there, thanks to, of course, the Treasury Department with that surprise announcement that they're going to be buying back some bonds on the long end of the curve. So there's sort of the Treasury's version of Operation Twist of kind of what the Fed did not too long ago. So certainly that is lifting sentiment here, that maybe that sell-off across the long end is taking a big pause here today. We are seeing a rally across sovereign bond markets here this morning. But we still got to talk about a lot of earnings, too, Dave.
Yeah, so the disappointment yesterday was Baidu. When you look at the market reaction there, today that's coming in the form of Kuaishou, the biggest decliner, as you can see on your screens. We're down about 10.5 on that. And it's unsurprising we're seeing this magnitude in terms of the move because, the earnings did underscore some of the headwinds there. And just analyst after analyst after analyst after analyst have come out and cut their outlook. And as far as the stock is concerned, this is just a partial list of what we've had so far coming through in the last, I would say, 2-3 hours or so. So Citi cut to neutral there, Macquarie cut to underperform, Morgan Stanley cut to equal weight, Barclays came out also a couple of minutes ago, also similar delta. And as far as that's concerned. So we'll unpack this even further later on. And just to also mention, we are in the thick of earnings season in China, about 1.4 trillion in market cap reports today. You have Alibaba, and you have really this cross-section of really big names from PopMart to 3S Bio. Some of the big telcos are also reporting today, so we'll get to that in a moment here. The broader read across equity markets, as Yvonne is pointing out, it's bonds and stocks that are doing well. Taiwan, though, okay, what's happening there? We're now down on Taiwan. Open very strong, 6% on the Kospi index. You did have, of course, that buyback from SK Hynix after the cash market closed yesterday. So that's on top, of course, of what we're seeing across the region and the macro picture. Chips are coming up on your screen. Some of the semis, perhaps, that would give you an indication there. There we go. SK Hynix is up now 13%. Softer dollar. We had a wider spread on the actual fix relative to the estimates. On the PBOC today, that's coming up on your screens. Aussie dollar is feeling the unexpected move coming through out of the jobs number, which is, I think, like how unexpected it is. I liken that to an Elton John song where he introduces a key change mid-chorus, something you would expect from Elton John, but in many ways it is unexpected still, where he places that in the sort of your chord progression. That's the musical reference there. But yes, we don't know what to do with that information sometimes, but it does have a market reaction.
But it does have a market reaction, despite every time, and there seems to be a lot of volatility around that data. I like your musical references, though. They don't do them at key changes in these new songs these days, right?
Everyone needs a good key change.
It's a good key change, and we got to do a list. Anyways, take a look when it comes to bonds here. I mean, basically everything but Chinese bonds, which has been the opposite story, is now rallying, right? So we look across some of these DM markets there. The long end seems to be really kind of likening the news that at least the Treasury Department is slightly concerned maybe of what's going on in this sell-off. And yeah, I think John Woods and Lombard Odier did tell us, I think once we did hit that 5.3%, on the 30-year, I believe, that's when maybe that would have been the line of the sand for them to step in. So just a series of interventions from Scott Bessent, of course, after what they did with the yen as well. So is this just a one-off? Can this actually lead to some sort of strong rally? Is it enough to thwart the bond vigilantes? A lot of questions, of course, for our guests here today. Here's just some of the commentary we've got so far.
Possibly that 5.3 was a knee-jerk reaction. When the 30-year hit that level, maybe that was seen as some sort of a reaction required. But my sense is that it's not going to change meaningfully the trajectory if it's a one-off, but until we get to see more sense of how that term premium is going to be addressed.
Is it treating the symptom or is it treating the cause? And at the end of the day, the US Treasury has, $2 billion worth of funding to do per annum at its current pace. It needs to roll over about $2 billion of debt every month, actually, $6 billion every quarter. So, you're just shifting the problem around.
And now Citigroup says that Asia-Pacific markets are set for an exceptionally active September to October period as issuers try to get ahead of the U.S. midterm elections. Let's get more now with their regional head for investment banking, Kaustubh Kulkarni, joining us exclusively here in the studio. KK, it's great to have you here on the China show. Significant activity. Can you tell us a bit more about what the second half is looking like to you right now, and what parts of the business are you really busy with these days?
Actually, yes, it is significant activity for the market and definitely great activity for us. I would actually say that probably we are getting into record volumes, certainly on the equity capital market side across Asia in the major markets. M&A business also has been very active, and DCM, if you look at G3, issuance is almost 20% up in Asia. And the key driver for this is, of course, a very, very robust macro environment. And what I think the global investor pool is actually responding to is the big themes which are driving major stock markets in the US, which is around the AI and digital infrastructure chain across semiconductors and manufacturing. Asia is playing a very, very important role in terms of enabling what's happening across the world, across the AI value chain. And what you're therefore seeing as a major market, certainly in North Asia, responding to that. And companies therefore are pursuing capital, raising opportunities as a response to the same.
And in terms of, I guess, specific parts of the fundraising story, where do you think we should be watching in terms of just a pickup in activity even further? I know it's across the board, but does anything stand out to you in particular?
I think if you look at it, particularly the China to Hong Kong, where companies at scale, companies have become very, very globally relevant in terms of the business model and effectively consumer technology IP that they have. You're therefore saying capital market activities in form of A2H IPOs or IPOs that are taking place. So that's one big theme. The second big theme you're saying, which is in Taiwan, is in relation to just the massive valuations that have risen, and companies are also in very aggressive investment plans, as well as they're financing their M&A transactions that they're pursuing. So that is driving massive levels of capital markets activity in the Taiwanese market. Korea, we have seen, I think, the SK Hynix and similar examples that we are seeing. So again, the themes are similar. Japan, of course, it's corporate governance, simplification and corporate structure, and massive private equity investments, which are also taking place in that market. So different themes for different market. But I would say the common theme is how Asia is becoming extremely important as a technology leader and provider for the entire ecosystem, which is effectively coming up because of the massive change which is being driven by AI.
And in terms of Chinese companies raising money in, let's say, Hong Kong, for example, what are you seeing on the other side of that in terms of foreign capital and the appetite for these deals here in Hong Kong?
Actually, it is intensely high, right? Because the kind of business models and what the companies are actually coming to the market with across North Asia in particular. The global investor pool is extremely keen and following, I think, what each of these companies are representing in terms of, as I said, technology leadership, cost capability, product features. which of all of those are very relevant. Then they benchmark, compare, contrast to, I think, what they are seeing in the Western world. And what we are seeing is that issuers coming from Asia also are equally keen to engage with global capital because they do think that there are a number of very interesting models in the Western world as well, and they would like to understand how can they differentiate, compare, compete, and get better. So I think there is a equal give and take between corporates very keen to engage with investors and global investors very, very keen to, I think, spend time with companies from our part of the world.
And you also flagged when it comes to M&A that you're seeing a resurgence of cross-border deals in China, as you highlighted, one market as well. What do you think is driving that? And what does it tell you about how you advise clients now for the rest of the year and in the next few years?
Yvonne, if I look at it, there are probably two drivers for major cross-border outbound coming in from Asia. One is capability, and second is market access. So depending on, I think, which sector you're looking at, you will see probably one of these two themes actually at play. If you look at, therefore, I think what's happened on the healthcare side, you're saying Sun Pharma, which is a transaction that we financed, more than $10 billion. That is about access to developed markets for what this major company can do. Some of the transactions we have seen from Taiwanese companies, which again on the M&A side, is capabilities access so that they can have the big products capabilities that they have. They can expand a lot more quickly geographically through those acquisitions. So I think it is effectively specific reasons which are driving M&A activity. And companies are very confident they can finance it both from debt and equity very quickly and therefore get the asset that they want.
Sure. What about things like divestitures and carve-outs, for example? Are you still seeing the same appetite? Because that's a very niche part of what you guys do as well.
I think the divestitures as a theme, we are absolutely seeing that in Japan, for sure, because corporate clarity is effectively forcing every major company. And also in Japan, you have seen shareholder activism is knocking on many, many companies' doors. So companies are responding to that. And therefore, I think in that market alone, we are saying simplification as a major theme. You've also seen that actually in parts of India, because again, there are companies which are simplifying their structures or are raising capital at subsidiary levels at scale. Okay. Again, same reason, where you want to match growth, shareholder access to companies which are growing, and then eliminate either the cross holdings or structure complexities so that each of the parts of the business can actually grow. And that's where actually private equity comes in on an interesting manner, because private equity then can come in across debt, mezzanine, control, and it's a great situation for them as well to be involved in.
You mentioned how you guys were part of this SK hynix ADR listing. You talked about all the action in Taiwan here right now. Is AI overshadowing a lot of your business? I mean, how much of the time you put is really on this whole disruption, and is it overlooking some other parts of this world now in some ways?
I wouldn't say Yvonne, AI is overshadowing this, but I think it's becoming a very important part for us to understand and read it better, and also anticipate and pivot our business accordingly. For example, if you look at some of the financings that our team is involved in different parts of Asia, actually. So if you look at the whole digital infrastructure, data center build out that is taking place, we see that as a high-quality business for us to pursue across the capital structure stack, because very few banks can actually compete, advise, and win and drive those kind of businesses. And there are several dozen opportunities that actually we are seeing and tracking in order for us to do. But we are dealing with investment-grade counterparties, structured contracts which are very, very comfortable from our perspective. And if we are looking at it through a credit lens, equally we are very capable of positioning it on the equity side for equity investors. So one is that part. But equally, if you look at it, it is not just AI, which is, I think, driving the surge in business activity. You are seeing healthcare being a very important part of new business, I think, that is coming up, just given the scale-up that is taking place on that. And the technology leadership companies in Asia, I think, are demonstrating. Robotics, high-end manufacturing, the whole electrical manufacturing chain on HVAC, distribution, transformers, cooling, all of those are interesting industrial businesses which are present in, let's say, in Taiwan, Korea, China, parts of Southeast Asia, but pivoting towards massive demand, which is surge for the next 4 to 5 years, and they want to invest in that.
I mean, there seems to be a mega deal almost every week, almost every day in some cases, whether it's equity markets, a listing in Hong Kong, a listing in China, a bond offering in the US. Do you get a sense that there is fatigue in the market? I just want to get a sense.
Is it as good as it gets, right?
As good as it gets.
As Jamie Dimon said.
There's a lot of demand is there capacity to absorb this? Like, what is your team seeing as far as when they start marketing this?
I think
it's like, I'll wait for the one tomorrow.
We always need to look at. Yeah, probably that's right. Because what was $1 billion as a baseline, which was a great deal, today it is
That's
2 billion.
peanuts.
Yeah, it's 2 billion or 3 billion, and there are many which are like a lot more than that. I'm talking about equity transactions, right? So clearly we can debate whether 3 is the new 1 or 2 is the new 1. But leaving that aside, and we have actually led number of those transactions as well.
Right.
And proud to have done that. But I think the fundamental point on this is investors actually are willing and ready. Because think about it, the market in itself, if the overall global market is 50-60% higher than what it was just like 2-3 years ago, then the base effect, the liquidity, volumes, etc., is meaningful. And while we are talking about transaction sizes, we always need to look at it in the context of liquidity and daily trading volume. These are not large transactions, actually. So because the market is so robust, when it comes to partnering on giving growth capital, investors prefer to do that rather than chasing that in the secondary. So they actually welcome new supply coming into the market because it just allows them to play. But the markets are super liquid, whichever you look at it in terms of metrics. And that helps.
Of course, Citi as a group has gone through this massive global turnaround. I think you're starting to see some real momentum. I mean, the last earnings talked about record M&A fees in 2025. How does that help you in this part of the world in terms of attracting and retaining your talent? And are you still kind of actively seeking to hire more people now in the region?
Yes, we continue to. In fact, I think as we articulated on Investor Day as well, and both Zheng and Viz talked about the war for talent that we have in our business. It has never been more intense than I think what we are currently going through, because as we just discussed, with the kind of activity that you have, every other major organization will be going through the same. But I think the way we look at it is we are very clear in terms of what we are looking for. And I think we are very clear in terms of the senior leadership roles that I think we are pursuing. And therefore, that is the excitement for that talent. And the massive platform that Citi offers in Asia across corporate, commercial, and investment banking is actually an unusual way for some of the talent that we are seeking to join us, for them to contribute and really scale up and create the mark for themselves, which is very different than what they can do than their own organization. So yes, the momentum is great. We winning our market share and getting to a target wallet market share is important, but it's just the ability to make a big difference for some of the external talent. Working with the massive franchise that we have is the excitement. But to be fair, we have great talent already in a company as well, equally.
Yeah, just the hiring plans quickly. Is that on a senior level? Is that across
Senior
the board?
level.
And how many headcount are we talking here?
Senior level. Within Asia, I think we've already had more than 10 senior hirings completed this year.
Okay.
And we probably will do half of that again in the next few months. And I think, as I said, this is specific senior leadership gaps that we have.
Sure.
And we want to eliminate white spaces, as we call them, so that we have a complete franchise in every major market. So that's the thesis for our hiring. Complete franchise at top in every major market.
Oh, like AI, like a full stack. KK, thank you so much. That was fantastic.
So
thank you so much for spending the time with us. Managing Director and Head of IB, Asia Pacific at Citi. Okay, speaking of deals, okay, Samsung's coming up on your screens. We're up 10 right now on the stock. It does, okay, so Money Today is reporting that Samsung will unveil 100 trillion won, just to underscore that, shareholder return plan, which is fairly consistent with what we heard from SK HKEX yesterday in terms of a buyback. We'll get you more details on this in a moment here. But yes, lots more ahead here. You're watching The China Show.
I wasn't surprised. What I think that threat was out there for a while. Like, I think market participants knew that this administration would look to doing things that are unconventional, and this was definitely on the table. But I think the real question is, what does it mean for kind of long-term viability?
The general upward pressure that comes every time there's a voracious demand for capital, and that's what we have right now, and I just don't think any of those are going to change. Short of a recession or a bubble bursting or some bad event like that, higher interest rates to me are likely here to stay.
The market reaction suggests that this is an important tactical move from the Treasury, a little bit unexpected, so you're probably getting an outsized reaction right now. But I don't think it changes the fundamentals of big fiscal deficits and a Fed on the sidelines, which is what's driving longer-term yields higher.
Yeah, just some of our guests there at Bloomberg from the last couple of hours, of course, on this move from the Treasury to buy, U.S. Treasury to be more specific here, to buy back longer dated bonds. 30-year futures, as you can see, holding on to gains. We're up 2% over let's call it 2.5 days. Anthony Stevens is with us here and set to talk us through the market reaction he's seeing.
Yeah, let's go through this like step by step, right? So first of all, as one of the guests said, it's a tactical move, right? It steps in front of the one-way speculation trade on long end. So that kind of dents that thesis. On the other end of things, you look at it one step further. It's what happens to this fiscal deficit, right? Where is the deficit going to be financed from? Does it move further, shorter? And that's been one of the preferences of Wash, right? To bring it closer to the current moment so that the interest rates that the Fed sets are more indicative. But now that raises the question, can the Fed continue to increase rates as they more directly feed into the deficit price, right? The interest rate payments. So you have this kind of dynamic where the Fed may be more constrained now. So it's an interesting thing for Wash to say that he wants markets to set interest rates, and then for the Treasury and Besant to say, oh, we don't like that signal. Like, we need to tactically push it back a bit, right? So you have this like push and pull where the Fed wants the markets to set rates and the Treasury is like, okay, we don't like what you're saying, right? So that is the first reaction function here. You're seeing a flattening of the yield curve, and there may be more to go on that front because markets are wrong-footed. Now, how that plays into Asia is interesting. We have the BOJ on the opposite side of things, where people expect near-term rates to go higher and the fiscal deficit there to expand as well. So how much signaling does Japan take from this Treasury action is also going to be very important to watch. Lastly, China has none of these problems. They just have really low bond yields. It's a very different case there. They have a lot more fiscal discipline planned, and they plan to stick on it. And as you saw today, the rates picture is just very boring. They didn't change anything.
It's more interesting for gold when it comes to crypto as well, just given this announcement as well. What are the implications for cross assets now?
Yeah, the prospect that the Fed is frozen into being stuck between the Treasury and what they want to do on rates and slowing inflation is supercharging short dollar trades, right? And that's what everything here was, right? You had this big pop in crypto as it kind of validates their thesis that the dollar is under long-term pressure. That's the constant thesis of the crypto universe, right? Gold, very similar. That's the case all gold bugs make, that the long-term picture of the dollar is constrained by this fiscal imprudence. And on the other side, you said a big move in Asian FX, right? Korean won had a massive move overnight as it got supercharged by this shareholder return programs from Hynix and Samsung. There's a lot more money coming home to Korea at the same time that the dollar is weakening. So that is a very strong dynamic. Lastly, the Taiwan dollar is starting to strengthen. So Asia dollar index has lagged the MSCI emerging market index on the way up, and now that gap could be closing as Asia's exports boom at the same time that the dollar weakens.
Anthony, thank you. Anthony Stevens there, our Bloomberg Markets reporter. Coming up, our coverage of the World Robot Conference continues. Yeah, you know the Hangzhou Six Little Dragons? There's a new group.
What's the new group?
Hangzhou Xinhua Jun, right? The 8 new steeds of the new hard tech innovators. And we're talking to one of them, Xynova. The CEO and founder, Alex Xia, joins us in just a few moments. This is Bloomberg.
Okay, we're looking at some of the pharma plays, and as you can see, almost at the very top of Everest Medicines there, 46% to the upside. Really, really good news coming through in the industry overnight, and you did see that, of course, with the massive spike in shares of Moderna, for example, progress in melanoma that's playing out across the peer universe and supply chain, which is what we're seeing here. Across the region. Gold stocks coming up on your screens as well with the pop we saw in gold, and I think we talked about this with Anthony earlier on. 4,500 in gold, tracking, of course, the prices of that, Laopu, and all its iterations across the Chinese space. And Samsung, of course, on the back of the news coming through today that reports it is set looking to return 100 trillion won. And I think we're coming off highs a little bit there on shares of Samsung.
Yeah, that's the next phase, really, from some of these chip makers, right? They obviously are making a lot of money. Returning to shareholders might be the next phase in this whole AI trade. So certainly seeing some pretty decent sort of payouts here, of course, from the likes of Samsung as well as SK Hynix. We did have that buyout plan, of course, buyback plan, I should say, yesterday as well. So we have plenty more to come. We're going to head back to Beijing, where the World Robotics Conference is underway. This is Bloomberg. .29 a.m. in Tokyo. Japanese markets are heading at lunch break in just a moment. You are seeing a pretty decent rally across not just stocks, but also bonds here today on the back, of course, that Treasury announcement to buy bonds on the long end of the Treasury curve. So that's helping the JGB 10-year yield down some 6 basis points here right now. We're catching a bit across equities as well. So we're seeing 1% gains for the Nikkei 225. And yeah, some weakness still in the yen, although that dollar drop overnight is helping it to stay around those 158 levels here right now, Dave.
Yep. I mean, was that part, if you think about it, by design, part of the intervention to bring down dollar yen? I mean, and that's really had second order effects in the region, right? So I think one of the things that we discussed earlier was the PBOC had to set and yank back the Chinese currency in the form of, the fix was, fixed at the widest spread to what the market was expecting going back a couple of months. I think that's one thing to point out. There's a lot of data coming through, July exports coming through out of Japan earlier today. We have a ton of data coming through out of Hong Kong. We have some bond auctions to tell you about, so I think that's going to be the next thing to watch when you have, of course, the Asia-Pacific benchmark, 1.5% to the upside. So we talked about Germany yesterday. You had the Fed minutes. You had, of course, this intervention on a 5.3% handle on the yield in the U.S. 30-year. We have a 20-year on deck today. Also a Japanese 20-year, and I think on Friday, is when France gets theirs out. Partial list, one of it, it's an 8-year auction there. So lots to watch in the fixed income space.
Yep, and that's certainly one thing to watch moving forward here on how lasting these moves are going to be, given this rally and this sell-off has reversed significantly here overnight. We're watching shares, of course, of Kuaishou, right, after earnings dropped the most in 5 years and really hit by the likes of higher revenue, sharing payouts to creators, right? The stock is down. I think this is session lows, close to 11.5% losses here right now. Let's bring in our Bloomberg Intelligence senior analyst, Robert Lee. He's had a busy week when it comes to China tech. What's happening at Kuaishou specifically?
Okay, I had a drink of Coca-Cola.
Good.
There are other
You're ready
sodas
to go.
available, so hopefully that will help. But yeah, I think weak numbers were expected, and the reported numbers with net income at the adjusted level down around 30% was broadly in line with reduced expectations. We can come on in a second as to maybe why that was. But I think the thing that really hit home was the cost of this ongoing pivot into AI, which is incredibly capex intensive, as we've seen from the likes of Baidu and even Tencent. So that is depressing their free cash flow, which has swung negative. In addition to that, and more importantly, and I think the thing that really has driven the stock price this morning, is that they were flagging short-term uncertainty within their business. Some of that relates to the e-commerce and live streaming sector, but I would say it also relates to the rising competition they are facing from ByteDance. Because if there's one aggressive company, and I mean that in a very complimentary way, ByteDance is the disruptor extraordinaire. So ByteDance is really gunning for them at the moment. They've launched a competing text-to-video engine, and again, very competitive pricing, good performance, and text-to-video AI generation is essentially Kuaishou's main strategy, main product. So that's come at a very awkward time for them while they're ramping up investment, hence the lack of returns.
Okay, well, obviously we're talking about Alibaba that's coming out with earnings. The stock has done relatively well, but it's also in the firing line of these newcomers, of course, right? So help us understand the context of Baba and what you're expecting for these earnings.
Yeah, a point I've tried to make before is that whilst the AI business to cloud will definitely catch the headlines, it has done and will continue to, the core of their earnings is still e-commerce. And as you appreciate, there's been a very vicious price war in the China e-commerce sector. The government did its best to try and calm those excessive competitive pressures. We're seeing some positive impact from that from the likes of JD. So I think the market is looking for a rebound in e-commerce. That will drive a decent rebound in their profitability. But overall, compared to the glory years, profit remains depressed. And why is that? Here we go again. It's rising AI spend. It's significant amounts of capex going in, which will remain elevated for some considerable period. Don't forget, management are targeting around $100 billion of cloud revenue in the next 5 years or so. So that comes at a cost. So I think, again, we'll see probably another substantial free cash outflow from them. To be fair and to be balanced, the top-line growth in the cloud intelligence business will be strong, and the momentum probably has increased for this quarter. The margin may show some improvement as well from a relatively low level, but the overall group margins remain depressed and significantly down back on where they were before. And so the overall conclusion from what we've seen in AI, AI investments are depressing cash flow across the sector. They are depressing margins, and basically we're seeing a structural downshift in margins across the sector because the financial returns in AI are just not there at the moment, despite the strong popularity of the models, etc.
Robert, thank you. Robert Lee there. As always, of course, a very realistic take of what's taking place there. Senior analyst at Bloomberg Intelligence. We went from Alibaba to Kuaishou, which, by the way, in case you don't know, which actually means fast hands in Mandarin. From fast hands, let's go to dexterous robot hands.
Yes, I like how you bridged it.
So that's, in fact, our next guest actually runs Xynova, which builds exactly that. One of the major bottlenecks in making humanoid robots is mimicking the ability of our hands and placing that quite literally at the fingertips of a robot. It is what the government is calling Hangzhou's new 8 seeds, a cohort of new generation hard tech innovators.
Yeah, so there's the little dragons, and now it's the 8 steeds, right? When you're part of this sort of hard tech supply chain, right? And it's really backed by the likes of Xiaomi, JD.com, and CATL, and it's currently taking part in the World Robot Conference in Beijing. Joining us now exclusively is Xynova's founder and CEO, Alex Xia. Alex, it's great to have you on the program. So, dexterous hands. I mean, obviously, we've been talking about the whole supply chain and all these different types of bottlenecks. And tell us a little bit more about just the use of these dexterous hands, right? I mean, we're used to sort of these sort of pincer-like grippers, right? What's the use case when it comes to your product?
Sure. So, first of all, thanks for having me, Dave and Yvonne. I think the biggest differentiator of this generation of AI and then the last generation is physicality. So, imagine that large language models are just brains in the vat. The human hands or the robotics hands are the interface to the physical world. So what we do is to give the robotic humanoid robots the capabilities to execute physical tasks. So this is what dexterous hands do. And to compare with grippers, I think if the humanoid robots eventually use grippers, it's probably the false premise for the embodied AI trend today. I think the dexterous hands is very important. It's the two things. The first of all, the degrees of freedom. The second is the biomimicry, because the degrees of freedom ensures that the data we collect with dexterous hands and based on the human hands can be easily trained on the dexterous hands. And also, the most importantly is the biomimicry, and because the whole physical world is built for human hands. And if we use grippers, we cannot achieve a lot of tasks. We cannot achieve a lot of tasks. For example, turn around a doorknob, maybe like needling, threading a needle, things like that. We can only achieve with dexterous hands.
Okay, Alex, David here. I guess for conceptual clarity, just maybe for viewers who might not be too aware, grippers is what effectively you perhaps get when you look at a lobster or a crab. Dexterous hands is effectively where you are with what we have. This is a very niche part of the industry, but the fact that you guys and a lot of your peers tells me that this is almost at the very frontier of what the hardware can do. How do you guys measure advancements? How does a hand get better in terms of its very latest iterations?
Yeah, sure. I think the most important parameter is degrees of freedoms. Right now we have like 22 to 23 degrees of freedoms, and we just revolutionized the whole industry with a very new architecture. It's we call it direct drive and tendon-driven combined. So to give the hands a perfect balance between the lightweight, the durability, and the functionality. I think moving forward, the hardware is just like a ticket to the game. I think moving forward, the most important thing is the data collection. If there's a company that can figure out how to scale up the data acquisition in a really fast way, the company will win the next game. Because compared with autonomous driving, there's a lot of millions of cars driving on the road collecting data every day. But today's the installed base of dexterous hands or humanoid robots are still extremely small. So the data collection becomes a very big problem. Xynova, we have developed a full tool set and for data collection especially for the high quality data, focusing on human hands. So I think this is very important because for pre-training, we need about at least 10 million hours of high quality data to kickstart.
Wow. Tell them about the pricing, because I think they're quite expensive, right? I think some of these dexterous hands could cost you more than the humanoid robot itself. Why is that the case? And do you expect pricing to actually come significantly down anytime soon?
Yes. So I think the question is, we need to ask whether the dexterous hand should be valued more than the whole body other than hands. I think the answer is yes, because there are much more degrees of freedoms in the hands rather than in the full body part. That's the first reason. The other reason, I think, is just we are at the very early stage of the whole industry of the humanoid robots. Right now, the price of a really most capable, most dexterous hands will be priced at $10K to $30K US for just one unit, not a pair. But I think the price will dramatically go down, in the next year or maybe in 2 years, because right now most of the users of the hands are just R&D labs and the top tier tech companies. But as soon as the data collection threshold is broken through, I can see the massive adoption of dexterous hands, and the price will go down eventually.
Alex, talk to us about the industry and the operating environment, and give us an idea of the policy support that a company like yours might be enjoying, for example, just so our global viewers can get a better understanding of this industrial policy, this ecosystem that China is creating. Yeah.
So, for example, my company based in Hangzhou, we have a great support from the policy, the government side, and we have a big talent pool in Hangzhou because it's called the China Silicon Valley. And also the policies are very friendly to a lot of talents. The government trying to attracting a lot of young talents to relocate to Hangzhou, to work there, live there, and to innovate. I think that is very important.
I believe you just attained this sort of unicorn status as well in your latest fundraising, Alex. So congratulations on that.
Yeah.
It seems to be like you're seeing very lofty valuations of some of these other competitors of Xynova as well when it comes to the dexterous hands sort of part of this robotics industry. Why do you think that is, and what are you going to be doing with the money, first and foremost?
Yeah. So for the money, the most important thing is for massive production. Right now, we are by the end of this year, we will be shipping more than 10K units of hands. So we need money to build up our factory to scale up the production. That's the first thing. The other thing is still the hardware is in the early stage. We need to keep innovating, keep improving our hardware and also our software and algorithm to provide a better, more robust system for our customers.
And your customers, do you have any customers in the U.S.? I'm just wondering, just given this latest FCC ban when it comes to foreign-made humanoid robots and the like, I mean, are you exposed to that anyway? And what impact do you think it could have on your business, if any?
Yeah, so we already have, yes. So we already have a lot of customers overseas, most of them in the United States. I think, well, I have to mention that right now the dexterous hands are not under the FCC jurisdiction, but as a tech company that's shipping hardware to the United States, we rigorously adhere to the local laws and compliance frameworks of the local markets that we operate in. But as someone who lived in the United States for 6 years, and I think it's very important for the United States and China to work together, moving forward, pushing the limits of the humanoid robots, because it's probably the greatest technology renovation in this era, and we need the brightest engineers, scientists, and the robust supply chain from both China and the States to work together for all human beings.
Yeah, the brightest minds and the most capable hands. Alex, you've just on the fundraising very quickly. So you've raised 4 rounds, and Yvonne is pointing out unicorn status. Are you shopping around for a 5th round? Is the 5th round an IPO? Give us an idea of your plans to, I would imagine, become public at some point.
Yeah, we will have a 5th round of financing before maybe going to the public market. Yeah, sorry, I cannot disclose too much, but we are on our way we are doing the financing round right now, currently.
Okay. Yeah, we understand, of course, your hands are tied on that one. Alex, thank you so much. Xynova there, founder and CEO, fantastic conversation. I think that's per capita, minutes per capita or mentions per minute.
Of hands?
Dexterous hands. I don't think I've ever said that once in my life, and I think I've done, combined, I think we've done 5 or 6 at the very least. Anyway, in case you want to rewatch that interview or some that you might have missed, it's the Video Hub, of course. You can check that out. Subscribers can explore live stream and news and interview. Check it out, Bloomberg.com/videos. Right, welcome back. As we've been discussing, it's really a very big week for earnings here in mainland China and obviously here in Hong Kong as well. Here, a reminder of the companies that are set to report these next few hours. Baba, PopMart, Ping An, Gore-Tech, iFlyTech, 3S Bio, in case you're curious what's happening in the bio space as well. So, Leaning, of course, it's also set to report. In total, we're looking at nearly a $1.5 trillion in terms of market cap set to report this Thursday.
Yeah, and among those that have already released their numbers is AIA, which reported 13% growth in value of new business in the first half. And that was led by strong sales in key markets, including Greater China. The expansion underscores a broader industry trend as local and mainland clients seek higher returns from insurance products amid low interest rates at home. AIA also raised its interim dividend payout by 10%.
We had growth right across the portfolio in our 4 growth engines of mainland China grew by 20%. We saw growth in Hong Kong, we saw growth in ASEAN, and we saw growth in India. So the business is performing very well. You see that in the numbers that you see today. And you also see our confidence in the future. We grew the dividend again by a further 10%. And we've now grown the dividend every year since IPO, even through the COVID years.
All right, this has been all over social media here today. A Chinese rocket booster has successfully returned to land for the first time. Xinhua says the Zhuke-3 rocket landed on its legs on Wednesday in the northwestern province of Guangzhou, now after taking a satellite into orbit. Now, what does it signify? Well, it's a significant milestone, Dave, when it comes to the space program in China as it races up to catch up with the likes of SpaceX, of course.
Yeah, the story is actually getting plenty of coverage, as you would imagine, in Chinese media. It's actually the front page of the People's Daily. Well, Xinhua is also touting the success of the project here. Now, China recovered, of course, another rocket last month, but it did so at sea. But yes, it, I guess, underscores, we've been talking about robots a lot and AI and, the models there. And this is obviously just the latest iteration of China's really upgrading its hardware stack.
Yeah, and really maybe, upping the stakes when it comes to this whole space race, right? With the U.S. I think it's interesting. I mean, obviously this was a very successful sort of launch. I think what people are watching and what the space world is looking at is really, can it demonstrate it can rapidly and cost effectively really refurbish and refly the hardware? So you got to do it more than once.
Yeah.
And I think for a company like SpaceX, I mean, that took years to master. So I think that's going to be the key moving forward here now.
Yeah, and I guess how much of an advantage is it to be a second mover advantage now that you had, of course, SpaceX being able to do that, right? And I think it's the same. I would imagine it's the same analogy that we do with, China looking to scale down in terms of the size of its chips, for example. Now that you have foreign peers at the very sort of cutting edge of that. But yes, that's certainly the path to watch here.
Yeah. So whether it can narrow the competition or the gap with the U.S., can it do this more than once, right, and refly? I think also a lot of Indian firms are also working on building these reusable rockets as well. So certainly the race is heating up now as we speak.
Okay, let's have a look at where we are as far as this the market story goes. Some of the chip stories we're looking at in Taiwan, for example. Just a brief look at some pockets of the equity space before we wrap things up today here on shows. You have, of course, Samsung there and the price hike and the report there. Crypto, we haven't talked about crypto in a very long time, and I guess understandably so, given it, the market has largely fallen asleep, at least as far as the big coins are concerned. Bitcoin, there we go. Yes, in case you missed that, we are at around $70,000 in terms of price. Short squeeze. Softer dollar story, yields pushing lower. So the Bitcoin story actually also is the gold story, just phrased differently. Its equity market iterations and names there across the region are also seeing some nice gains on the back of the price gains there. Okay, now, so what precipitated this move that we're seeing here across the region is the bond story. And it's interesting, the timing and the magnitude at which the U.S. Treasury is now talking about bond buying. Our guest earlier on shows, John Woods, pointing out, and this, I guess, is something in the industry is talking about, is the 5.3% line, the line in the sand, as far as the U.S. Treasury goes, right? So we've seen a pullback, and a continued pullback we're seeing, albeit less so on the 30-year yield today. We're seeing that across the region as well. Very quickly, the Hang Seng Index, about an hour and a half into the cash market session there. Again, we talked about the earnings story. That's still going to be very much front and center. On price itself, not a lot of movement there. Baba is set to report in the next few hours. Stay tuned for that. That is it from us here today. We will see you all tomorrow. Have a good day.